next one on our list is OCN. It's Aquin Financial. I believe that's how it's pronounced. And likewise, even though this one is a financial stock, I just really couldn't help it. I mean, just look at its trend over the past 2 years. I mean, it really has gone well. And even the October crash, once again, and this is a financial corp, and I don't really have any idea why they are so much stronger than all the other banks and financials. But even since the crash, going back to October, they have been nothing but on fire. And let's just take a look at the movement since the October crash to today. That's 171%. Good night. That'll make a living for you. So the reason I entered the trade, I was back here. Whoops, let's go ahead and get rid of that real quick. Okay, the day I got into this one, I had just a beautiful trend, a nice flag forming, and it was coming down. And you know what? I originally had my order in here at about 950 at 61%. But because of this flag pattern and breaking this new high on great volume, I went ahead and did a pass-through trade, what I call it, and I went with it. Might be a little aggressive, that's for sure. But I put my stop loss down below this former support area here. And I'll show you what happened since then. On this big bump off the earnings call and the volume spike, it started to create another flag pattern. So, a more patient trader would have said, hey, you know what? I'm going to wait for this flag pattern. I'm going to get in on the retest here, or I'm going to wait for this flag pattern to break. Either way, those are all certainly strategies used by a lot of successful traders. And let's kind of get an idea what's gone on since. And this last Friday, or Thursday I believe it was, it hit the target. And no, I take that back. It actually hit the target back here, the first Fibonacci. And so then it moved up the stop loss to here, and it's looking real promising, even though it's a financial. Very interesting. And the last one on our list is Smith & Wesson. And it too has been on fire since the crash in October. If we look at the trend since then, from the lows to the ultimate high was about 371%. That's just a strong moving stock. And so the day I got in it was, whoops, let's get rid of that line. The day I got in it was right there, the blue oval. So that's what I was looking at. And the reason I got into it, I had my order down here at the 61% line. That's where I like to get in a lot of times, especially on something that's moving so strongly. But this was a former high point and thus a support level. So I saw that, and I saw this candle right here. We'll go ahead and zoom in just a little bit. I saw this candle and I saw this candle, and to me it was just screaming out that the bears were not going to drive this down. So I got in here, and admittedly that might have been a little bit too aggressive. Certainly patience would have paid off, but hindsight is 20/20. And so because I got in so aggressively, my target was not the 100%, but the 127. And let's see, since then it really has kind of done a whole lot of nothing, even though it has some volume spikes in here, and some fear has entered the market when it comes to this stock. So that certainly is a reason to kind of wonder where it's going to go. But once again, once I'm in a trade, I do not exit. I let the technicals do my analysis because, it has not violated any technical analysis. We have our stop loss way down here, and I put it down there for a reason. I want to go for a real high probability trade. So obviously I don't have a whole lot of shares in this stock because of that high risk, but I know exactly what it's gonna lose. And that's why my target is quite a bit higher, just below a previous level of resistance. So let's just kind of see, and it is starting to recover. So you can see, with earnings and all these different news events, I really don't make changes once I'm in a trade. I try to not let news bias my opinion whatsoever, because I am easily influenced. And what kind of strength in news is more important? What's going on in the economic world, or from Wall Street Journal, or Barron's, or just the company's earnings report? My belief as a technician is I try to rely purely on technicals as much as I can, and because my belief is that, and a lot of technicians do as well, is that all the news and all the fundamentals and all the stuff that makes up the value or the price of a stock is showing in its price action. And the one thing that shows up in the price action that no news can report, or no fundamentals or no company earnings report can, is what is the supply and demand for this stock. And to me, supply and demand is what really kind of rules the direction of a stock. And so I try to follow that price action and volume as much as possible. So last couple little things here is this is the spreadsheet, the trade log of all those trades. And so far, we only have a couple of them. This one has hit second target, and these have hit first target. And if it's not highlighted, like this one is, that means it has not, or it is a closed trade. So you can see we have one completely closed, a couple partials, and a couple that haven't hit anything. Right now we're at a 80-20% and a profit factor of 1.27. It's okay. I mean, but until we get some more trades closed, that number is kind of not all that useful. And then lastly, I'm also tracking the same breakout trades on my paper account with Thinkorswim. We're assuming it's a $100,000 account, so that's how all these position sizes have been determined. On a 1% risk, though, just kind of let you know, just so we don't run out of money. If we get 50 to 75 breakouts posted by everybody, we want to make sure there's money in the account to go ahead and make those trades. So it's based on a 1%, and that's a great place to start when you're first learning how to trade, especially. And then later on you can bump up to 2 or even 3, but 3 is kind of stretching it. Other than that, happy trading, and we'll catch you on the other side and talk about the investment club.